Hey guys, and welcome back to Insideinvesting. And today we're going to show you how to grow your net worth using compound interest, because compound interest allows you to grow your net worth from $250 to $600,000. And in this video we're going to show you how to calculate and how to actually increase your overall net worth this significantly. And it's using compound interest. So we're going to explain everything to you. We're going to dive into the details, show you a few examples, and actually perform the calculations ourselves to show how to increase your net worth from $250 to $600,000. So let's go. So in this video, we're going to explain to you what compound interest is and why it's so useful to actually apply to your investment portfolio. But that starts off with the question, what's compound interest? And according to Albert Einstein, compound interest is the eighth wonder of the world. He said that this is the most powerful force in the universe. He also said, he who understands it earns it, and he who doesn't pays it. And I think that overall, that quote shows you how incredible, powerful compound interest is. And this is also why we started investing at a very young age. And this is why you should also start investing as soon as possible, because the longer time you have to invest, the more profit you can make on your investment portfolio. So we're going to dive into a few details here. So compound interest is actually interest on interest. So your portfolio increases because you get interest over the money that you have in your investment portfolio. And on that increased value of your portfolio, you're going to get new interest, more interest. If you multiply that, within a few years, you notice that the profit out of your portfolio increases significantly. And there's quite a difficult formula to use in order to calculate your compound interest. That's now shown on the screen. We also think it's very difficult. So what we just use is a very easy compound interest calculator. And what you'll see on this compound interest calculator is that we started off with the initial investment of $250, just like we mentioned at the intro of this video. And then we contribute on a monthly basis, again, the $250. So per month, we're actually investing $250 over 40 years. So here we entered in total, we need 40 years to increase the value of our portfolio this significantly. So that's what we entered here. Of course, you can enter your own time that you want. In our case, we entered 40 years. Overall, we think that an estimated interest rate of 7% is feasible. If we look at our current return of our investment, we are a little bit above the 7% on our own. So that's around, I think, 10 or 11%. That's already on the high side. So let's say the average interest rate should be around 7% of your portfolio. That's a very feasible and actually also achievable interest rate for the average investor, let's say, right? Not the Warren Buffetts under us, but just the average investor should get the 7% interest rate. And then we compound it on an annual frequency. So in our case, we say that the interest will be compounded on an annual basis. So we actually re-evaluate the overall value of our portfolio on an annual basis. And that's what we entered right here. So we use the calculator from investor.gov, but you can of course use different calculators that you can find online. There are a lot of different calculators to find for compound interest. So please go ahead and just click on the Google search result that you find most attractive. If you also want to start investing, please use our link down in the description to start investing today using our broker. DEGIRO is a very easy to use broker. You can also apply compound interesting at your own investment account using DEGIRO. So please use the link down in the description to start investing today. Thanks for watching the video. If you want to learn investing, subscribe to get more free investing and finance tips and tricks. We give you easy to follow, straightforward suggestions on how to start investing and improving your portfolio. Like the video if you learned something new today, and comment down below the topics for the next video. So after we pressed the calculate button, we got the results in. And in the 40 years that we would be investing, after those 40 years, we would have achieved the $600,000 mark, which is very significant. So just with the $250 per month investment, over the course of 40 years, we would have enough money to retire from and to just live the life that we want to enjoy. So this shows that with a very small amount of money, you can actually achieve very big results as long as you invest consistently on a monthly basis and use compound interest to your benefit. So in here, we've shown the graph of the total savings in our case. So we started investing, as you see on the left, at the 0-year mark. And then every year we see the total contribution, which is the green line. We see that staying consistent throughout all of the 40 years. So each and every year, it's actually the same amount of money that we invest, which is $250 on a monthly basis. But then we do see that the future value, so the actual value of our portfolio, increase significantly, right? So we see that over these years, so especially after the 28, 30-year mark, we see that we actually double the amount of money in the next 10 years. If you would take 50 years, you would see this price increase being even more significant. But this shows the value of using compound interest to your benefit. So when it comes down to investing in the stock market, I think Warren Buffett's advice to the majority of the investors is actually quite simple, and that is play the long game. So Warren as well, he only invests in stocks that he plans to hold for a very long period of time. So he doesn't do the day trading stuff where you invest a lot of time on a daily basis. No, he just buys stocks of companies that he thinks over the long run, so within the 10, 20, 30 years, are going to be successful. So companies that are going to be successful in the long run, and in those companies he invests because he doesn't believe in short-term trading. He is actually the definition of investing for the long term. And Warren has actually always resisted the short-term investment, so try to earn a quick buck. No, his rule is actually to only invest in companies that he understands, so companies where he understands the business model that they use and actually understands how those companies make their money. If you don't understand how a company makes money, then you should skip it or invest in the market using an S&P 500 ETF, just like we showed in the last video where we discussed the S&P 500 ETF as well. So we'll link that video at the end of this one, so you can watch that right after this one. So Warren Buffett actually says you should consistently buy an S&P 500 low-cost index fund. So this is his strategy for most of the average investors. And this is also what we apply ourselves as well. So we just buy consistently a low-cost index fund, also the S&P 500 one, but also the VWRL index fund that we showed in a previous video. So he says you should invest in the S&P 500, and by choosing to invest in that ETF, you're buying a fund that owns all 500 companies. So by owning one share, you're actually owning a piece of each company. And that's the thing that makes the most sense most of the times. So how does such an S&P 500 ETF look like? So in this case, you would see that the S&P 500 ETF includes a portion of Apple, Tesla, Facebook, Amazon, as well as Microsoft. So all of these big companies, actually 500 different companies across the United States, are included in one S&P 500 ETF. So by buying just one share of this ETF, you're buying into all of these different companies. So 500 different companies, you're buying a small fraction of that company. So this is an easy to entry, low cost way in investing in a very broad spectrum of different companies across different markets, so tech, healthcare, banks, etc. If we then look at the performance of this S&P 500 index, you would see over the last decades how significantly this index has grown. So right around 1990s, which is around 30 years ago, we see that it was still around the 300 points. Then it increased very significantly in the next 10 years. There was a little bit of a dip. It increased again back to that point that it was at its peak in 2001. Then again, a little bit of a crash around the financial crisis in 2008, 2009. But then afterwards, it has been a very steep and quick growth back to its all-time high that it's currently at around 3,800 points. So that's you see a very big increase in the last 10 years. So if you also want to invest in an S&P 500 index, then use our link down in the description to start investing at DEGIRO today, where you can always buy your S&P 500 ETFs. So guys, thanks for watching. We hope you learned something new today. If you did, please give this video a thumbs up, subscribe if you haven't done so already, and please comment down below any topics that you want us to cover in the next video. There's a lot of different videos coming in the near future. We're also going to dive into a few tips and tricks from the legend Warren Buffett himself. So please subscribe so that you're always up to date on the story of investing. See you in the next one, guys. Let's go.